You may know that breakouts from consolidation are my jam. Let's take a look at a good short-term consolidation indicator, the inside candle method. Stay tuned. Hi, this is Tim from TradingStrategyGuides.com. Still struggling with my voice. I appreciate your patience. I'm still hopeful that it will clear up soon. So we didn't quite make our goal of 150 likes on Monday's video to collaborate with Casey Stubbs on the option strategy. We're close though, so I really need you guys to step up and let Casey know how important this is for you. Look in the upper right corner of this video for a link. Check it out. And let's get those likes up to 150. I'll also link it in the description below. Today's discussion is about the inside candle method. If you like to trade breakouts from consolidation the way I do, it's a great way to find smaller consolidations and more trades on whatever time frame you want to look. I'll get to that in just a few minutes. After that, I've got a descending triangle set up on the cryptocurrency Ethereum Classic. I'll show you that, but first we've got a gazillion charts to look at this morning. New trade triggers and a few blown out patterns that we're going to skip right over. Then later on, the trading maxim for today. Today is hump day, guys. Let's get on with it. Remember to click the subscribe button and hit the bell so you don't miss any of these great trading methods. Okay, let's go to the charts. Here's an example of how this strategy ideally works. We've got this Litecoin Bitcoin re-entry on Monday's close right here at about 58.02ish, and the first target is hit on Tuesday. My first half position closed for profit, and I moved my stop down to 58.02 on the second half. So this is a free trade from here on. I'm going to watch the parabolic SAR right here for an exit on the second half. Here's the weekly US dollar Mexican peso short that we took last Friday. If you entered this on a daily signal, then you've already hit your first target on this one. I'm still waiting for the weekly target to be hit, so this may take a while. Patience is key on weekly trades. As you know, I've been watching this New Zealand dollar Swissy for an exit using the parabolic SAR. I've been out of this trade with about 40 pips profit since right in here. But I want to see how the PSAR would handle this exit, and it hit our stop of 64.50 yesterday right here on this candle. So we made a profit of 61 pips on this one. Of course, this is only one test, but I wanted you guys to see what a forward test looked like. Before I will actually seriously use the PSAR or any other exit indicator, I would do way more extensive tests on it. And remember, it's not going to win every time. We're just looking for it to win more than some other exit method. I've got lots of back testing and forward testing to do before I change up my rules. I believe it was Monday I told you to keep your eyes on the Euro Swissy for this break of the bear flag. Looks like it's happening today, so be alert. A close below this bear flag is a sell signal, so I'll check this out just ahead of market close today, which is 5 p.m. New York time at my broker, and sell this if it's still below the flag. Silver is attacking the top of our bullish wedge pattern right here, so watch for this one to break over the next week or so. Okay, let's take a look at some blown out patterns. Of course, a blown out pattern is one where we didn't enter the trade and it didn't move as we had hoped. In this case, an ascending triangle needs to break to the upside, and it obviously has just kind of dribbled down this way. It is still struggling at this parity level up here, but the ascending triangle pattern is blown out. We'll still want to watch this at this resistance, however, because still a very strong level. This daily ascending triangle on Costco that I talked about in late October looks like it's blowing out. Just like the dollar Swissy though, this 307.30 level is a strong resistance level, so we need to watch it when it approaches this level again. This bear flag on the New Zealand dollar Japanese yen appears to be blowing out right up here. As you know, I only sell a break of this flag, so I'm done watching this pattern for now. This 69 level right here looks pretty strong though, so I'll be watching an approach of that level when it happens. Okay, I'm going to show you this Ethereum Classic setup shortly, but first I want to talk about the inside candle method. If you've been on this channel for a bit, you know that I like to trade breakouts from big consolidation patterns. On the daily chart, they often take weeks to form, so if the market is compressing, I don't get too many trades going on. If you want to get in a few more trades, there's a quicker way to identify consolidations, the inside candle method. So what is an inside candle? An inside candle is a candle whose high is lower and low is higher than the prior candle. I know that's a little bit mind-blowing, but in other words, the high and low of the new candle is contained within the high and low of the prior candle, or the current candle is engulfed by the prior candle. The inside candle represents a pause, consolidation, or compression of the market after a big move. Typically, you will also see reduced volume on this candle as well. For the purposes of this entry method, we also want to see the new candle in the opposite color of the prior candle. In other words, if the prior candle is bullish, we want to see a new candle to be bearish, and vice versa. Here's the set of rules for this entry method. Rule number 1, look for an incoming trend. The inside candle method is a pause or reversal of a trend. It is much more effective with an incoming trend. Rule number 2, look for the inside candle. It needs to be the opposite color from the larger prior candle. And lastly, rule number 3, enter a break of the larger engulfing candle in the direction of the break. Which trades you take is a matter of preference. Some folks like reversal trades. I prefer trend following trades. So I want to see this in the context of a larger trend. But if you're scalping, it may not matter which direction you go. Just take them all and shut the ones down that don't perform. Here's a reversal pattern with an inside candle. The method is simply to enter the trade on a break of the prior larger candle in the direction of the break. In this case, I won't look for a candle close above or below the larger candle like I do on the daily big pattern trades. I will just place a sell stop order a couple of pips below the candle and a buy stop order a few pips above the candle. The distance above or below depends on the time frame you're trading. Typically, I would manage this trade the way I manage all my trades. If after the candle breaks, it closes back inside the larger candle, I would shut the trade down and set up to take the next break. I would use the ATR for target and stop loss, and I would take half the trade off at first target, and so on. But if you have a trade management plan that you like better, go for it. And that's the inside candle method. If you guys have any questions about this, don't hesitate to post them below. I'll be glad to answer them. Here's a reminder. Our fearless leader, Casey Stubbs, agreed to work with me to develop an option strategy to take advantage of my trade setups if we could get at least 150 likes and 20 comments on Monday's video. Well, we got the comments, but we came up about 30 short on the likes. I know you guys want to do this, so take a look at Monday's video and give it a like so we can do this option strategy. I'll put the link in the description below. Time to look at the Ethereum Classic trade setup. Here's a daily chart of the cryptocurrency Ethereum Classic. This descending triangle has been active for several months now. A descending triangle consists of a strong, well-defined support level, in this case 345-ish, with these tests here, here, and of course right now here. Then you want to look for a downtrend line like this right here, and that indicates fewer and fewer traders are wanting to see this go up, putting more pressure on the support level. And the whole thing should be confirmed with a nice decline in the volume and a nice decline in the volatility. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. The descending triangle is a bearish pattern, and I will only take a sell signal from it. And here's the trade plan. We'll sell a daily close below the descending triangle. On the breaking candle, to enter a full-size position, I want to see this volume bar reach up as far as this volume average. If it doesn't reach the average, but does reach at least 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing this volume number by this volume average, and you should get at least 0.75. If you don't get 0.75, stand aside on the trade. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. So that means, again, on the breaking candle, let's say it breaks to here and gives us a close right there. That would be our entry. We will then look down here at the ATR. We'll multiply that by 1.5, and we'll measure that up from the entry, and that'll be our stop loss. And we'll measure 1 ATR below the entry, and that will be our first target. If after entering the trade we get a candle that closes back inside the triangle here, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of this pattern should be explosive and hit our target fairly quickly, kind of like the Litecoin Bitcoin did this week. We'll then follow stops as price moves in our direction until the market takes us out. Now those two rules, closing the trade early if it gets back into the triangle and taking half of our position off at the first target and allowing the second half to run, are the very definition of cutting your losses and letting your winners run. Now typically I do this with 2 positions. The first position has a stop loss and a take profit on it. The second position has only a stop loss. The first position will close automatically when the first target is hit, and then the second position will be allowed to run. When the first target is hit, we'll have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And remember, the cryptocurrencies trade all weekend, so keep a watch on it all weekend. And that's the new setup on Ethereum Classic. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's also my intent for the trading maxims, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading to make sure that you always do the right thing. Feel free to borrow from my list. And today we've got a brand new one from one of my favorite celebrities. Tim's Trading Maxim number 64. Success isn't always about greatness. It's about consistency. Consistent hard work gains success. Greatness will come. And my favorite celebrity, Dwayne Johnson. If you don't know who Dwayne Johnson is, I guess you've been living under a rock. Get it? His nickname is The Rock. Dad jokes are the best. Seriously, Dwayne Johnson is an American actor and former wrestler with the World Wrestling Federation. In my humble opinion, I also think he's an all-around great guy. And a pretty wise fella, too. I firmly believe that success comes from consistency. Success in trading comes from consistently testing and applying your trading rules over time. Eventually, with that consistency, you'll become a great trader. Remember our daily Ethereum Classic trade plan here. We're going to sell a daily candle close below the descending triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. Remember to click the link below to the trade management video for more details. And while you're clicking links below, click on the link and sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out 3 or 4 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. Be sure to come back to Trading Strategy Guides YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. And go back and check out Monday's video and give it a like so Casey will work with us on this option strategy. That way I'll be able to analyze some of the bigger stocks and you'll be able to take advantage of all the setups that I show you. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great remainder of your week, and I'll see you next time.